Hey Credit Warriors, welcome to the show. And recently you may have seen a load of videos about the so-called 2021 stock market crash. I had to put 2 from Kevin because, he uploads like twice the number of videos that anyone else does. Anyway, so you might be like, we just had a stock market crash. We're gonna have another one so soon? Well, maybe, maybe not. So let's have a recap of what happened in 2020. And then I'm gonna share with you what I think may happen in 2021 and my strategy to cope with it and invest going forward. If you like the sound of that, why not hit the like button? It doesn't do anything for the YouTube algorithm, but I like to think it does. And also, if you're new, maybe consider subscribing for new personal finance and credit card related content several times a week. Anyway, let's get going. This year, the market bottomed out on March 23rd. Now, at that time, I uploaded several videos, including why I'm buying stocks right now and did we already hit the stock market bottom? Accurately calling the stock market bottom as March 23rd. I love going back to those old videos and leaving snarky comments at all the haters. Now, I had no way of knowing for sure that it was the market bottom, but I can guess within a certain degree of probability, and I guessed right. Now, at that time, I piled money into the stock market, buying stocks like Tesla, Tapestry, Delta Airlines, and Uber. And all of these stocks have performed incredibly well. Tesla was up over 1,000%, and many of these stocks also were up about 100% or so. Delta Airlines is still recovering. I've sold out most of my Tesla stock, and I'm using that money to buy a piece of land. So it's been an exciting year, and there have been several times when I've taken profits out of my account only to find a few days later the gains have actually made up that money and returned the account to the same level it was a few days before I took money out. It's just been an awesome year. So why do people think that there could be another stock market crash on the way? Well, historical data backs up the idea that there could very well be at least another correction. The Motley Fool quoted data from Yardeni Research, which says this: there have been 8 bear markets in the S&P 500 since 1960. In the 3-year period following the bear market bottom, in each of these declines, there were 13 instances when the S&P 500 corrected lower by 10 to 19.9%. Now, if you don't know, a bear market is when the market drops more than 20%, and a correction is when the market drops between 10 and 20%. So over the past 60 years, every time there has been a bear market, it has been followed by a correction, and in some cases, more than one correction. So from historical data, there is a very real possibility that we could have a market correction in 2021, and the Dow could drop from its sort of 30,000 level where it is right now at just under 30,000 back down to the 26 or even 25,000 mark. And that's especially so if we do indeed have this dark winter that Joe Biden has been promising. But you've seen how the market reacted to the positive vaccine news that we had a few weeks ago. It just shot right up, and if we have more positive news about the coronavirus, I think there's so much pent-up demand that it's going to bring the economy right back on track. For example, although in-store sales this Black Friday were down 52%, Black Friday actually ended up being the second largest online sales event in American history. And today, Cyber Monday is slated to be the largest ever. And with a vaccine for COVID literally starting to be distributed within a week or two, it looks like it would take a lot to hold back that demand. Now, if we look at the stock market, stock prices normally price in where they think the economy is going to be at in 6 months or so from now, all right? Because you try to buy low, sell high, okay? You're preempting market moves. So have a look at owner of Coach and Kate Spade Tapestry, or TPR. It's already recovered to pre-pandemic levels, indicating that stock investors and traders think that in 6 months from now, their business will pretty much have returned to normalcy. And Tapestry also discovered that coronavirus makes women spend more money on handbags. I literally have first-hand knowledge of that. Mrs. Credit Shift bought a Kate Spade bag last week. But I think a lot of other companies will be in the same boat, perhaps with airlines, cruise lines, and hotels having a little bit longer of a timeline for getting back to normalcy. But if you look at coronavirus cases versus deaths, right now the cases are about 6 times what we had back in April, but the deaths are still lower. The most recent high day was 2,300 deaths, which is still tragic, and we just got to take a moment to acknowledge that. But that was off of around 200,000 new cases reported per day, versus 2,700 deaths on the highest day back in April, off of around 30,000 cases reported per day back then. Now, I am not a doctor, and don't quote me on this, but I believe this shows one of two things. Either the virus is becoming weaker and we're developing herd immunity, or because we are discovering so many more new cases, because we're doing so much more testing, we're actually realizing that it was nowhere near as deadly as we initially thought it was. Anyway, listen to your medical professionals on this. There's probably a little coronavirus warning below this video that you can click through right now and find out some information on. I'm just giving you the facts of how analysts look at this data and think, how is this going to affect the market? What does this probably mean? Okay. Now, what could have an impact, though, is that if certain governors decide to shut down their states again, even though the death rate isn't as high as it used to be. And we are seeing a little bit of that in certain cities and certain counties. And if Joe Biden becomes president, you may be looking at a 4-week lockdown. Look at this. Biden COVID advisor says US lockdown of 4 to 6 weeks could control pandemic and revive economy. So let me get this straight. A medical doctor is saying that you should shut down businesses and halt economic activity, and that is going to revive the economy, something which he in theory knows nothing about, all right? You can't make this stuff up, guys. But this all depends on whether Biden becomes president. And ooh, get ready for your second warning label of the video. You've had the coronavirus warning, now get ready for the "this claim about election fraud is disputed" label. It should be right below. So right now there are numerous court cases across the nation to do with the election. And personally, I think the election could still go to Trump. Now, I'm not being partisan here, I'm just being realistic. Trump could actually still win through the courts. Basically, I think there are now 3 outcomes that could happen. Number 1 is basically what we see now. Biden becomes president, but the Republicans hold the Senate after a runoff in Georgia. Now, the markets actually like this. A divided government can't change much. Sure, Biden will probably get through an infrastructure bill. He'll probably bring back the Obamacare mandate, which forces you to buy healthcare, but businesses actually like that stuff. But as for him getting his tax plan through the Senate, Republican-held Senate, I do not think that's going to happen. So in that case, I would see a kind of a steady rise for stocks, even if there is an initial correction due to a 4-week national lockdown, which, despite what any medical doctor says, is not going to revive the economy. Then the second scenario is that Trump wins through the courts and the Republicans hold the Senate. Now, I think in this scenario, you're going to see a middle-class tax cut, which is what Trump promised, and perhaps even a payroll tax cut. Then you'll probably also see some kind of stimulus bill. It'll probably be a skinny stimulus bill without stimulus checks and a few other things, which is what the Republicans wanted, sub $1 trillion, but there probably will be a stimulus bill. But I think because of all the tax cuts, and we know he's into regulation cuts, you're going to probably see a stock market rally, something similar to what happened when Trump won the election back in 2016. Then the third scenario is that Biden wins the presidency and the Democrats get the Senate. And this is the worst scenario because it means the Democrats control everything. And I'm not trying to be partisan here, but for your finances, this is the worst scenario for your money. It really is. So that 62% tax rate for high earners that 50 Cent made such a fuss about, that would be coming in right away. Corporate tax would be raised to 28%, and there'd be loads of new regulations coming on the books. According to the Tax Foundation, the US would rank even lower in tax competitiveness under Biden's tax plan than it did before Trump's tax reform. And you'd have that 4-week lockdown that he's promised. It's going to be a dark winter indeed. But on the bright side, you'd probably get a stimulus check, although that's no substitute for real economic activity. But the key in any of these situations is to adopt the right strategy for the way the market is moving. And you can actually make money in any situation. The idea is to buy low, sell high, or buy low and never sell. So anyway, let's finally get to talking about my strategy. So recently, I have sold about 50% of my portfolio and take profits. I've been cashing out to buy some land that I'm going to develop. Now, I'm going to have more videos on exactly what I'm going to be doing with that land on my other channel, The Business Shifu, so do check that out. But even if I wasn't buying that land, I would still be doing some adjustments, and this is called portfolio rebalancing. So normally I allocate 40% to individual stocks, 40% in ETFs tracking the market, and 10% in gold funds like GDXJ, which is kind of an insurance against the threat of inflation or perceived threat of inflation. It tends to do well when stocks do badly, although not in every case. And then I have 10% in cash for trading or swing trading opportunities. Now, what happened this year was that Tesla ended up taking up about 50% of my portfolio, making me like 70% in stocks. Then my gold holdings grew by about 40% as well, so I sold a lot of my gold funds around the peak, and also sold most of my Tesla stocks at close to $500 per share, so I just have a couple of shares left now. Now I'm slowly buying back into my portfolio and looking for good opportunities. I'm buying shares of GDXJ as it falls. Basically, anytime I see it under $50 per share, I buy. Hopefully it'll go down more. As for Tesla, I'm basically done now. I'm just keeping the few shares I have left and holding them. I think the huge explosive growth with Tesla is probably over, but I'm sure that stock will continue to rise. It's a rockstar company anyway. And I'm still looking to buy some recovery stocks that haven't fully recovered yet, and I'm keeping cash on the side waiting for that correction that historical data shows is very likely. Now, if that happens, and especially if it's combined with a Trump second term and a Republican Senate, that's going to be a golden buying opportunity. But I'm confident that I can make money under any of the three scenarios that I mentioned in this video. Guys, if you want to know about Biden's tax plan, which you should, because if he's president, then it's going to affect you, I have another video about that on my other channel, The Business Shufu, and you might as well check that channel out as well. I do a lot more personal finance and investing related stuff on that channel. So if you like that kind of thing, do check that out. I'll put it on the end card of this video. But for now, please subscribe if you're new, and we will see you next time. Bye-bye.